Hello, and thank you for tuning into today's webinar hosted by Index One and BX Partners. My name is Gayatri, and today we will be discussing direct indexing, the key stakeholders involved in the direct indexing ecosystem, and why you should consider direct indexing in client portfolios. Today we have Craig Camille and Chris McAfee from BX Partners, along with Alexander Berg from Index One, who will delve into why advisors are excited about direct indexing, the open architecture of direct indexing, and how BX Partners and Index One are key players within the ecosystem. Direct indexing is an automated investing strategy powered by technology that allows advisors to purchase all the stocks a client would normally own by buying an index fund. This ensures clients full ownership over their investment objectives while reaping the many benefits direct indexing has to offer, including tax loss harvesting. Craig, could you start us off by discussing the upcoming trends and index strategies that advisors are increasingly seeking and why advisors are excited about this movement in the industry?
Yes, thank you, and welcome everyone. The four of us on this call and the rest of our teams have been studying indexing and more specifically direct indexing for a number of years, and it's really rolled out into the US market, into use by financial advisors. It has historically been an institutional and or ETF based solution, but direct indexing, as we now call it, is becoming more and more widely used by a broader set of people, including financial advisors. And so, Chris, I'll kind of turn it over to you with the first thing we really want to talk about today, which is, from an evolution standpoint, how did we get here, and what do we think is some of the gaps that were in this industry that we've attempted to fill?
Yeah, thanks, Craig. So you can see a number of different investment types up on your screen with this little chart. I'll just kind of take you through it. So up until maybe the 70s or 80s, the predominant mode of advisor-driven investing was advisors selecting individual stocks to recommend to their clients. And that was fine, except for when it wasn't fine. But then starting in like the 80s and early 90s, there was a big move towards mutual funds. And mutual funds gave you instant diversification. Mutual funds came with several big drawbacks. One, performance was inconsistent at best. A lot of them performed rather poorly. The taxation is a horror show. I mean, mutual funds force you to realize gains that you haven't even taken yet. So I'm paying taxes on money I haven't made, which isn't what you want. Inability to personalize, typically very high cost, right? So then, a step up for wealthier clients starting in the 90s, maybe early 2000s was, a huge growth in separately managed accounts. And what that gave you was the ability to tell your client they had an institutional quality money manager running their assets. But what you gave up was a lot of times performance, a lot of times they didn't work out as advertised. Very, very difficult to control on the taxation side, because once you give discretion to that manager, they've got the discretion. It was difficult to kind of take the taxes. You couldn't personalize it at all. You were hiring somebody else to run the portfolios. So then in the 90s through the 2000s, you saw tremendous growth in advisor use of ETFs. And ETFs solved for a lot of these problems, right? So they were now not, instead of being a net negative from a taxation perspective, they were a net positive. Something called, the way the create redeem mechanism works means you don't have to pay gains on gains taxes on gains you haven't realized yet. Performance is okay. Actually, ETFs are by and large designed to deliver mediocre performance, as defined by, I'm just trying to match the market. Once again, impossible to personalize them because you just own the same fund that everybody else does. A lot of times they're low cost, but some of the more innovative strategies came with a very high cost. So that wasn't necessarily great either. So then, maybe within the last 5 or 10 years, you started to see direct indexing, which solves for even more of these problems. The first is tax alpha. It's been demonstrated through a number of academic studies that you can pick up 150 to 200 basis points of after-tax return every year by tax loss harvesting that's available through direct indexing. Performance, however, still they're designed to actually to deliver the market and even a little bit less, because once you personalize, you get into a tracking error dilemma where I'm trying to only underperform by 100 basis points kind of thing. So performance is designed to be, designed to be okay. The big drawback, one of the big drawbacks is the number of holdings. So if I want to have a large cap, a mid cap, and a small cap portfolio, I might have 1,200 to 1,500 names in the account, which if you don't have fractional shares is almost impossible for anything but the very, very wealthiest of clients, right? And when you wanted to do tax loss harvesting to realize $20,000 in gains, you might have to sell 200 stocks, which, okay, technology has made that easier, but then you still got 200 line items on your tax return every time you go and hit that harvest button. Cost varies pretty dramatically, but you pay for what you get in that space. And you're not getting a lot of advisor support, and you're not getting open architecture. In other words, you're basically only participating in one index manager's strategies. And what they're not doing is enabling you to blend indexes together and show you comprehensive portfolio solutions. So what we're delivering, BX index on the rightmost column, is you're still getting the tax alpha. Our indexes, while we do have pure beta indices, our indexes are by and large designed to deliver performance, to track a factor, to deliver excess yield, to each one has a different strategy, but all designed to put the client in a better position. Where we also excel is our indices were designed specifically for advisors to use as a direct index with their clients. So they're designed with 30 to 50 holdings, which is extremely manageable. It makes the tax loss harvesting easier. It's easier to read your statements, all that kind of thing. Cost is very reasonable, et cetera. So this is kind of an evolution and how it's gone. And so Craig, that's kind of how we got to where we are and what we're offering.
Yeah, thanks, Chris. Yeah, I think that just to summarize everything that Chris just said was that we felt that the early days of direct indexing or personalized indexing for financial advisors was just a very cumbersome task. And so we set out to build a platform to help manage that. And we partnered up very early on with Index One. And Alex, what were you saying from an industry trend standpoint that led you all to meet us in the same part of the world when it comes to indexing?
Yeah, so yeah, from an indexing standpoint, the index industry, I think, has not gone through that much change over the past, 10 or however many years it's been around. Indices have obviously grown in terms of adoption, primarily from the ETF space. But the actual index products offered by index providers have not changed all that much over this period of time. And the gap we're really trying to fill in this space is essentially the creation of custom indexes, making that more efficient, both in terms of cost and in terms of speed to delivery. And we do that through our technology platform, Index One. And as it comes to direct indexing specifically, when you look at the kind of first generation solutions in this space, a lot of them still rely on the same core indices provided by, the big name index providers like an S&P or MSCI, and they're built on the same base universes and the same sort of base weightings, and really the customization is not really there. Most of these solutions, they can screen out certain companies or apply certain factor tilts, but that's really the extent of it. And what we're helping to do is what Chris mentioned, is create indices from scratch that are really designed for direct indexing use case. And yeah, I really think that's a powerful solution. That's a good addition to the space.
Thanks, Alex. The one of the screens that you're looking at now is a suite of indexes that we built in partnership with Index One. When I say built, we built them in partnership with third-party money managers or third-party index providers. The one thing that makes this platform very unique is that all of the indexes were built by independent firms that really are located around the world. It's very open architecture. That's very important to BX and very important to Index One. And so we're continually searching with Index One to find money managers that have a unique and different strategy. And in all of the strategies are, systematic, / quant based in nature. They're all rules based and by and large rebalance or reconstitute typically monthly. And as a result of the growing trends in quant and systematic and rules based, we're able to identify strategies that are really compelling and bring them onto this platform. I'd like to turn it back over to Chris now and just introduce the platform, what you pulled up here, and what we mean by open architecture index platform.
Yeah, no, thanks, Craig. So what you're looking at here is Index One's index screen, and I've sorted just for the BX indices. There's a large number of different providers on the platform, but even the BX indices, as Craig mentioned, we've partnered with a large number of different partners from around the world in order to create these indices to bring to you. And you can see, you can scroll through the pages. There's a wide variety of them designed to enable you to build, great total portfolio solutions with direct indices, and at the same time not have, 1,500 kind of holdings in your account. So you can scroll through these and take a look. Here's one that's really differentiated. So there's not a lot of SMID, which is small and mid cap momentum product in the market. ETF wise, I believe there might be one or two, but it's interesting, and academic research backs this up. The momentum factor is really powerful in the small and mid cap space. It works in the large cap space, but it's very, very powerful in the small and mid cap space. And what we've done is we partnered with Phase Invest on this one. Phase Invest is powered by some very bright people that have a really well-defined definition of momentum that's very different than what you're getting from other index providers. And we can go through the methodology at some point hence, but I wanted to pull this one up for the simple reason that it's so much different. But if you want US small cap exposure, the performance here is really fantastic. So you can, after you're done looking at the index, you can come through and actually pull up a fact sheet. Right, and this is something that's very closely aligned with what you're accustomed to seeing, and it just shows you, so this is fishing from the pool of the next 1,000 stocks, but only holds 50, right? And applying Phase Invest's momentum factor basically to that universe winds up delivering you a portfolio that looks like this. BSMAX is the benchmark that we've chosen. That's the BlackRock small and mid cap index fund. So you go through, and we have partners from around the world. In London, we have Libra Investment Services. We have Index One actually provides several of our indices. Phase Invest, who I'm demonstrating right now, Drawbridge Strategies out of the US, and a number of other providers. And what we've done is the due diligence on this universe to bring you kind of the best of the best. Craig?
Thanks, Chris. Also at the end, if you have any questions, you'll be able to submit those in the text. We'll do a little Q&A at the end. Alex, let me turn it over to you to just walk us through the Index One system and what you built and what the what it provides.
Sure. So yeah, I'm not gonna, I think, present anything, but I'll just talk through a bit, talk through sort of how our solution works and how I see our role in this ecosystem. So in essence, Index One, we're a index calculation platform, and we provide custom index development as a service, but also through our software platform that any owner of a investment strategy or signal or an investment idea can use it to design an index methodology and run backtests, multiple iterations of backtests, and see how that would have performed over time to various benchmarks, and have the ability to tweak their parameters and build sort of a well-performing investment strategy, while also taking into account things like turnover and portfolio size and other factors that can impact the actual investability of that strategy. So separate from the backtesting, we also run the live calculation. So all of the indices we're currently launching on BX. We run the ongoing calculation. So some we do real-time calculation, some end of day. We run the rebalances. So the providers of those strategies can essentially, through our interface, provide the new target holdings, schedule rebalances in advance, and all the trading or change in shares of this hypothetical index run automatically in our system. In addition to that, we run daily corporate action adjustments, so things like dividend adjustments, split adjustments, any delistings that occur. Our system handles that in a very automated fashion, so to provide basically a up-to-date view of the index and make any adjustments that might affect the index performance. But yeah, one really core thing that is unique to our platform is the integrations. So we're a pretty central part of the BX, I think, ecosystem, in the sense that we're maintaining the index performance and real-time index weights, and we're able to push those through to trading software or reporting software that it really allows sort of seamless integration to other tools in the sort of tech stack that might be used. And aside from that, we have some smaller sort of utilities that are quite useful. Chris just pulled up a fact sheet, for instance, that we've set up in such a way that they can be generated in real time, essentially, or every day. So you have an up-to-date fact sheet on any strategy, and all of this setup is really quick, especially if you compare it to the sort of traditional development time of an index, which can be several months. We've done setups in same day, essentially, and I think that's also a really important factor, is sort of the speed to market on this.
Yeah, thanks, Alex. Index One plays a very important role for not only us but other designers of strategies, and but as a result of our partnership, we've been able to create an ecosystem that can bring multiple tools and resources and strategies to financial advisors and other institutional investors. So Chris is going to walk you through that ecosystem and what some of that looks like.
Great, thanks, Craig. So a few minutes ago, I was showing you the small and mid cap momentum index, but that's not a comprehensive solution. That's not going to be somebody's entire portfolio. So thanks to our partnership with Index One, we're able to have Index One take the data and send it to our portfolio proposal and analysis tool, Alphabot. This is an extremely powerful engine. Craig, are you currently seeing the Alphabot portfolio creator screen? Okay, so what we know is we want to blend these to create comprehensive portfolios for clients. So unlike other direct index providers where you do all the work to create just one sleeve, all of the data for all of our sleeves is in this application, and we can blend portfolios of anything you want. If it's got a return stream, we can model in here. Every ETF, every mutual fund out there, the data is already in here. So you can see this is a model that we created for an advisor who was using one of the off-the-shelf global moderate ETF models from one of the big shops, and it was, you know, kind of a marginal performer at best. Bought into the concept of the direct indexing, bought into the concept of what we're doing. So we put together this portfolio, which is designed to replicate a global moderate, you know, model. So you can see that small and mid cap momentum is the small and mid cap piece. Focus 10 is a somewhat aggressive 10 name equity strategy. Dividend yield plus momentum is a great large cap alternative to the S&P 500, which is interesting because like half of it's a high dividend yield, dividend growth strategy, and half of it's momentum, but putting them together, they work really well. And it helps you avoid some of the concentration risks that you're exposed to through some of the cap, you know, pure cap weighted vehicles that are out there, all the way through to a couple of fixed income strategies. But what I can do then is I've created this portfolio. I think I like it. Really just a couple of clicks away from having a really nice looking report, you know, for your records that you can see, okay, here's how all these pieces fit together historically, and here's how they here's how they would have performed. Right, and it's a really nice looking report. It shows how every piece of the pie did. Obviously, these two down here are the fixed income sleeves. The total portfolio, the manager, all the stats you could ever want to see, right? That's great, but what you can also do is come back here and compare it to a benchmark. Any benchmark in the world you can use, or what's going to be, in most cases, more appropriate is a custom benchmark. So the benchmark that I created here was, you know, it's some equity, a little heavy US equity, and some basically aggregate exposure, right? So designed to be a global 60-40 portfolio. You come over here and see how the portfolio that we created with you compares to that global moderate benchmark. And you're picking up 350 basis points. You got a much smaller maximum drawdown. So your Sharpe and Sortinos are much higher. Once again, touch of a button. Really nice looking report that you can, you know, that you've got for your records that you can show to people, and it just doesn't take that long to do. We will work with you to do this and create the right outcomes for, you know, for yourselves and your clients by using these tools, which are very powerful. So Craig, that's kind of a snapshot at, you know, how we've created a whole ecosystem. We didn't just make the indices. We want to help advisors do a better job, and we've put it together with Index One, and in this case, Alphabot, to make that happen.
Yeah, no, thanks, Chris. That's a very powerful system. Alex, just walk us through the process of how a team can create their own index and how they could leverage Index One to do that, and anything else that would be important in this ecosystem of our direct indexing partnership.
Yeah, sure. So yeah, in terms of constructing a new index, there are really a few ways we go about it, and a lot of it depends on, firstly, how much, you know, infrastructure or existing data the provider of the strategy has, and secondly, how complete the idea is, you know, at the point that we get started. So, you know, we've built indices that have really just started from an idea, and we've helped sort of gather the necessary data. We have a tool that's very useful for building a base universe, comparing the portfolio or the potential holdings over time based on various attributes. But we also have use cases where someone has been running the strategy for quite some time, and they have basically weightings or even a performance measurement that's been running live for some amount of time, and we can very easily just import that into the platform and essentially start or take over the live calculation of that index. And it really helps the owner of that strategy to take some of the burden off running the infrastructure. We have price feeds that we connect to that are very reliable, and all the corporate action data that you need to maintain it over time. So it's really good value add in my view to just take on some of the burden of maintaining the strategy over time. But anyone who's interested in doing that, who might already have a strategy or something in the works, we'd be happy to jump on a call and discuss how we could assist.
Let me ask you a question, Chris and Alex. Let's just talk about creating a brand new index and the benefit of that to either a money manager or a group of advisors that might have a strategy that hasn't really been officially tested or built, or is not put into a form that can be shared with other people, and the data of that moved around. So, Chris, why don't you go first and layer in, what you think would be helpful to people to, not only use some of the indexes we talked about today, but to create something brand new.
Well, I mean, there's a couple of different things going on there. One is, come to us, work with us. Since we've got this great network of index creators, it's nice that you can go to Index One and do it yourself, but you might, as an advisor, know what you're trying to get done, but not really know how to do it. Well, we can match you with the right set of experts that can help you to create your own custom index. And by the way, any of these indices are white labelable. We don't have necessarily pride of authorship here. So if you want to take these and present them to your client as your index, that's fine with us. We can set that up for you. Another thing is, what these indexes on the BX platform have in common is they're 100% rules-based, right? We think indexing works from an investment perspective, not because the biggest stocks will always go up forever the fastest. In fact, that game might be over relatively soon. It works because it takes human mistakes out of the investing process and human emotion and that kind of thing. So we can help you design indices based on what you're trying to get accomplished that can help you to take, even though it's your idea, but to take, maybe your decisions, your client's decisions, which might ultimately be harmful to the portfolio return, kind of out of the equation. The other thing that was mentioned by Craig and Alex is, like Alex said, if you have a strategy you've been running and it's rules-based, we can make that index for you. In fact, a number of our strategies have been running live as separately managed accounts for a long period of time. For example, the financial trust products, the small and mid-cap products, I think have like 20+ year track records, and they're PSN top guns. The advantage to having it in an index is we can place it in your hands, you retain control, you direct index it, rather than hiring somebody as a third-party, money manager. I think a lot of advantages to the client and the advisor, and it really all depends on what it is you want and what it is you're trying to get done.
Alex, do you want to comment on the question of sort of the power of taking in an investment idea and actually putting it into an index structure?
Yeah. I mean, one of the main areas or main sort of benefits is really the sort of independent third-party calculation. So if you have an index, that you're calculating internally on Excel or wherever, someone viewing that might not necessarily have the confidence that firstly the performance figures are correct, or that you don't have backdated holdings or something like that in the equation. So having a third party calculate it, I think, is for visibility purposes a very good benefit. The second is we help publish the index, so we publish it on our own platform to some of the integrations I think we've talked about here. We publish indices to Refinitiv, for instance, makes it discoverable to a wide range of investors, and that's really an important factor for visibility and getting eyeballs on it and generating interest for the product. And the third, I think, would really be the operational burden, which I talked about earlier. But if you have a product that rebalances monthly and it's fully rules based, it's something we can run automatically on our end, and along with it you get the daily tracker file, daily or intraday performance, fact sheets, everything that could take a big amount of effort to do yourself is all sort of built into the platform and is ready to use out of the box. So I think those are really the main sort of areas that I would highlight.
Thanks, you guys. Yeah, I mean, as I'm kind of taking notes on this conversation, the ability to create indexes allows you to customize them, tax loss harvest them, seek ways to get better performance, put them in more manageable baskets, allow for easier blending, and really to get at the investment goal that you're trying to achieve in a very efficient way. G, I'll turn it back over to you for any closing comments, questions, and wrap up.
Brilliant. Thank you so much. And yeah, thank you for all of your insightful thoughts and feedback on the concept of direct indexing. And I hope that our audience watching have also found the webinar useful. And if you have any further inquiries and you would like to explore direct indexing, please feel free to reach out to us. You can reach out to BX Partners at bxindex.com, or you can contact us at Index One via indexone.io. Thank you again to everyone watching. Thank you to all the panelists, and we look forward to seeing you on our next webinar.